The cryptosphere, especially from the inside out, is a bit of an echo chamber. After all, the technology that runs cryptocurrency and blockchain networks, as well as the possible use cases for this technology, are so new and so esoteric that there's almost a language barrier between crypto community members and the rest of the world. People on the inside speak about decentralization, hash rate, and Byzantine fault tolerance without blinking an eye, while onlookers simply scratch their heads. It's exactly this gap in information that has at once led to both the alienation and the glorification of blockchain technology. Crypto and blockchain seem both too outlandish to use in a widespread and serious manner, and so groundbreakingly innovative that they must be great investments. In other words, most of the narrative around blockchain technology is very polarized. The perception seems to be that either you're an all in, born again Bitcoiner, or you're a skeptic who couldn't possibly understand the tenets of Satoshi Nakamoto's creation nor its progeny. The lack of nuanced conversation in the blockchain world has had disastrous consequences in the past. The ICO boom and bust of 2017 was largely fueled by a whirlwind of hype and misinformation. The financial fallout, as well as the reputational damage to individuals and companies working to make blockchain technology meaningful, still continues today. Therefore, developing a culture of healthy skepticism and deep understanding of blockchain and cryptocurrencies, warts and all, is essential. David Gerard, crypto journalist and author of Attack of the 50-Foot Blockchain, is doing just that. Finance magnates recently sat down with David to speak about the current state of blockchain and crypto, as well as the newest iteration of Facebook's Libra and what, if anything, blockchain is actually good for. I'm Rachel McIntosh, and this is the Finance Magnates Blockchain Podcast.
David, now that we're officially on the record, I just want to thank you once again for coming on the Finance Magnates Blockchain Podcast.
Thank you.
Yeah, so I am a big fan of you, but can you tell people who might not know who you are a little bit about yourself and the work that you do?
So I wrote a book called Attack of the 50-Foot Blockchain, which is like the third skeptical book about Bitcoin and cryptocurrency like ever. That came out in 2017. Since then, I have somehow developed this second job as a finance journalist in the world of cryptocurrency. Like, I get paid money to do this now. So yeah, it's a job. It's a weird job to fall into because I'm not actually a great fan of this stuff. I don't think any of it works very well. I don't think it's a good investment. I think there's lots and lots of reasons to stay away from it, particularly if you're a retail investor. But it's also really totally fascinating and really interesting to follow. So here I am.
Yeah, absolutely. And I want to start with something that you said. You were quoted by the Financial Times earlier this week talking about Libra. And you said that it's basically like PayPal, but it's Facebook. So can you tell us, just elaborate a little bit more on that? Why did you say that?
Wow, I've been following Libra since before we knew it was called Libra. Back since we got intimations that Facebook were doing something. No one could work out what they were doing or how this would make sense. And, you know, like PayPal, but it's Facebook, like that makes sense. It's a business, you know, being a money transmitter, that's a business. It's a respectable business that's well understood, well regulated. People know how it works, you know. And then people went, but they're doing a cryptocurrency. And we went, no, they can't be doing crypto. That doesn't make any sense. And then we saw what they came out with and in June, and it made no sense. And it was bizarre because it was like, you know, those ICOs you'd read about in 2017 era where they'd say, and our coin for bananas or dentistry will revolutionize the economy as $4 trillion of Dentacoin will take over the world. And, you know, this was obviously stupid and impossible. And when regulators hear some crypto bozo say, and then our bananas will take over the world, they go, that's nice, just don't break any laws. And then the people break laws and the regulators have a few little words with them. When someone the size of Facebook starts talking the same way, governments get worried because Facebook is a company with a continent-sized user base. You know, they're big. And just like you look at current money changes like Tenpay, Alipay, or WeChat Pay in China. Those are very, very popular money transmitters. They are a lot of the economic activity in China now. And they have like just the float, right? Customer funds that are just stored there. You know, like having money sitting on your PayPal, that money. It total is about $150 billion as of 2018. If Libra operated at the same scale, that'd be like a substantial chunk of a trillion just sitting there as the float, particularly if they operated in richer countries, because China has rich bits and poor bits, but on average, it's not very wealthy totally. If a much richer country got into it, that'd be huge. That's a country-sized amount of money just sitting there as the float, So regulators are going to get worried about that. So this is why Facebook had such a hard time out the gate,
Yeah.
and the weird cryptocurrency dreams, and we'll have this completely backed currency, and then it'll go permissionless. Like, how do you have a backed currency that's permissionless? So much about it was contradictory and didn't make sense. The Libra white papers contradicted themselves, and you'd see them change over time. Like, I actually was researching all the various versions of the Libra white papers. There's been 8 different versions of the main one, for example, that I found. Like, that's before the major revision they just released. There's been like 8 different little tweaked versions. They had this original scheme for Libra investment tokens, which was where you buy into the association, you get a crypto that is a security that pays you for being a member. That quietly was disappeared from all the documentation around July. That sort of thing.
Right.
It's amazing what you find when you just do the legwork.
Yeah, I'll say.
So it turns out that several hours slogging through documents to discover all sorts of interesting things. But the thing was that Libra, I don't has a bad rap amongst a lot of serious Bitcoin people, but it's very much a creature of the Bitcoin subculture, very much the Bitcoin one specifically, because David Marcus is, of course, he's a huge Bitcoiner. He has been since 2012,
Okay,
He's mates
I didn't
with
know that actually.
Wences Cazares. He's a mate of Wences Cazares from Zappo. He was one of the early investors in Zappo. He was one of the guys who put his stash of Bitcoins onto the laptop in storage that was the first sort of Zappo as custodian thing,
Okay, yeah.
This is all in Nathaniel Popper's book, Digital Gold. It's got a bunch of stuff on David Marcus in there, And that's never been a secret, right? It's just people don't talk about it. But it's highly relevant. That's why if you read the original Libra white paper, it's got all these Bitcoin dreams, we'll bank the unbanked with no detail as to how they'll do this.
Yeah.
We'll have all these crypto freedoms and instant remittances, and it'll all be amazing and out of government control and so on. And, it was hauntingly familiar to anyone who's ever read crypto white papers.
Right, of course.
And that's why it totally was bizarre and baffling to the mainstream finance press, because they'd never seen this sort of weird stuff coming out of a serious company that had money. And this is why I think the record was Bruno Le Maire in France, who came out against Libra literally minutes after the announcement, because he was being interviewed on radio when the original white paper dropped.
Okay.
It was like a few minutes later, he was saying, of course, it'll have to be regulated in this way and this way and this way and this way. And like a few hours after that, Maxine Waters from US Congress was saying, right, Libra better not happen in this way at all. No, it's just not a happener. And then it came out, Steve Mnuchin, the treasurer, Secretary of Treasury, had spoken to Facebook before and said, no, this thing is trash. I don't like it. You're not going to do this. And it's like, it was not a sort of political response. Everybody hated this thing on site because it doesn't make any sense in conventional economic terms, And they went, none of this makes sense. What evil are these people planning? But it wasn't evil. It was just weird and incomprehensible nonsense.
Naive, perhaps, yeah.
Yeah. It was like they wanted, I don't know, I'm trying, it's hard to read their minds, obviously. I think Mark Zuckerberg, the attraction was that he always felt governments were an annoyance to conducting a business. So he thought, private money issued without governments, I like that.
Yeah.
But David Marcus is very much a Bitcoiner. He said that he would have done it with Bitcoin, but he's very much a digital gold sort of guy. You know, he thinks
Mhm.
Bitcoin's a store of value. He thinks it's very bad as cash, which it arguably is.
Yes.
So that's why he said if Bitcoin was good as cash, Calibra would just have been a Bitcoin wallet. He would have done that, but it wasn't. So that's the answer to all the people who keep asking, why don't you use Bitcoin? Because it doesn't work as cash, you know. But so now they've gone to this plan of national tokens, and maybe there'll be a synthetic Libra token, and they'll have to obey all money laundering rules because they had to, obviously, otherwise they wouldn't be allowed to do this. And this should have been obvious. And David Marcus used to run PayPal. He should have known this. And
Right.
it's like, I don't understand why they thought this was ever going to fly. And it didn't. So, yeah. PayPal, but it's Facebook. That's an idea that I can see it working as a business. You know, it makes sense. It's reasonable. They could possibly bring value. You know, give them a go. And they'll have to be as regulated as PayPal, where compliance costs are quite a huge chunk of their cost of doing business. Because, you know, this stuff is hard because crooks are very creative in what they'll use, you know. And
Yeah.
people worried, what if Amazon does one of these? You know, Amazon has enough headaches with Amazon gift certificates being used by crooks, you know, because Amazon gift dollars are a pretty useful currency. Yeah. So yeah, it's none of these ideas made sense. So now you have central banks talking about central bank digital currencies, which they were talking about for years, right? Because this stuff's one of the jobs of central banks is to think about what might happen in 5 years, right? They have
Mhm.
to go off on weird excursions into hypotheticals because they have to not be surprised. So that's fair enough. There's been a lot of papers about this stuff. But Libra was announced and suddenly they went, oh, crikey, and they had to get all the papers out and suddenly maybe apply this stuff. So all the talk of central bank digital currencies now is because of Libra. And
Right.
now Libra is saying, right, with central bank digital currencies, this shows a clear need for Libra. No, it doesn't. It just shows you scared them. You know, so it's all really sort of weird and interesting. But none of the interesting things will be anything like all the original Libra plans because there's no way they'll be allowed to do any of those. This
Right.
is what I mean.
Exactly.
There's a
Yeah.
lot of stuff that's fascinating and makes no sense, but it's really amazing to watch while it's happening. And I find that I didn't know any of this. Also, I didn't know any of this sort of finance stuff until I started getting into this because, you know, no one expects a journalist to know everything, right?
Right.
But you have to be able to research really fast. And I spend a lot of time asking people who know things. So how does this work in the real world? And they go, well, let us tell you, you know,
Mhm.
like going into the Libra stuff, I'm getting like central bankers answering my Twitter messages because like they're helpful. They're glad when anyone's interested and wants to know what they do, you know.
Yeah. Yeah. Usually, no one is asking them these things.
Yes, people who know stuff, if someone's interested, they'll tell you.
Mhm.
You know, like Alexei Grimm from the Bank of Finland's been super helpful, for example. He's very cynical about the idea of CBDCs because he thinks there's a sort of spectrum like cash issued by the central bank. We had that in Finland in the 90s with Avant and stuff
Mhm.
like that. And what constitutes central bank cash is Tenpay and Alipay doing central bank cash. Well, they're forced to bank with the People's Bank of China at 0%. That's actually central bank cash
Right.
and that sort of thing. It's like when you look at this stuff, it's sort of like, what is a central bank digital currency? And it's like trying to answer the question, what is money? You know,
Right. Right. Yeah. So. I mean, one of the other things that's kind of been going around, ever since Zuckerberg testified before Congress in the fall was that, well, if we don't do it, then China is gonna, everyone's gonna be, trading in the digital renminbi. What do you think about that argument? I mean, is that enough to sort of maybe push the United States into having a CBDC? What do you think?
so I found the press articles which had the guy from the People's Bank of China literally saying that we're pushing forward our central bank digital currency efforts because of Libra.
Yeah.
So Libra was used as an argument, something that was happening because of Libra.
Aha.
So I understand that like there's currently a sort of trial of a central bank digital currency, but central bank currencies are previously called cash, you know.
Mhm.
Um, And what makes it central bank? And also, does this affect the rest of the economy? Well, that depends how big a slice it is. Is that the only kind of money? Also, what about, is credit money? Well, yeah, it sort of is sometimes.
Mhm.
Banknotes were originally credit. It's a tricky one. I
Yeah.
I read this great paper from about 1999. It was a paper all about the wildcat banking era in the US, when there were all these little private banks issuing banknotes,
Mhm.
but those banknotes weren't really perceived as very money-like. They
Mhm.
were much like private bank gift certificates or phone cards or something. They were things that stored a certain amount of dollars, but they weren't widely accepted universally or universally trusted or whatever. And that was probably a good idea, because a lot of these banks collapsed and stuff like that.
Yeah.
But those was useful enough that they centralized banking in the US, because it turned out that having currency notes is a good idea, but not done by these guys, that sort of thing. So I don't know. I think central bank digital currencies are much more a matter of the politics of banking. Who gets to be the bank? Who gets to do certain things? Because
Mhm.
the way money is actually issued now is not a great big printer at the at the mint. It's not someone running an actual printing press. It is It is commercial banks making loans. That is where new money actually comes from.
Right.
And central banks could also issue cash, and that would change the mix of who was supplying dollars to the economy. Um, and yeah, it's sort of politics of who gets to be a bank and do certain jobs. And central banks don't really want to be commercial banks. I think that's a bad idea, because they're used to having a few tens of customers they know really well, as
Mhm.
opposed to hundreds of thousands of random people coming up to them. And they'd have to become the commercial bank if they took their place. And it's like, there's a lot to object to in the current financial system, but I'm not sure that's one of the things. And so anyway, this is what I mean. This stuff is fascinating.
Yeah,
And
absolutely.
crypto's caught bankers' eye, because everyone looks out for what the new thing is. But I'm not sure that, like, a few central bankers have said, of course, there's no reason that central bank digital currency would be based on any sort of blockchain, because there isn't. It could be what we have now, which is where money is basically a number in your current account at your bank, and you wave a card, and that is effectively cash these days.
Right.
It's and sometimes that money is much better money than actual physical notes are, if you have a shop that doesn't take cash, that sort of thing.
Right. And yeah, I mean kind of from your perspective as a blockchain skeptic, like
Yep.
what would the real possible benefits be of having a digital blockchain based dollar, let's say, versus what we have at the moment? There,
None
I
I
mean,
can
it's
think
yeah.
of. It's like, I think that would actually, a central bank digital currency would be useful in inverse proportion to how blockchainy it was. Like,
Okay. What do you?
everything about the usability of Bitcoin was one of the big problems for it as a
Mhm.
consumer currency. You know, it was a pain in the butt to use. Irreversible transactions was part of the basic design, but I think every problem with cryptos as consumer money is because of irreversibility. Mistakes aren't fixable. Thefts, all fraud is final. You
Yeah,
know,
exactly.
if I pick your pocket from the other side of the world, those are my Bitcoins now. You know, um,
Mhm.
you'll have a few cases like the recent DeFi hack, the most recent DeFi hack on DeForce,
You're right.
um, where the attacker stole a bunch of tokens that were literally not exchangeable except in one place, and they knew exactly which ones had been stolen, so they
Mhm.
gave them back.
Yeah.
But
Oh my God. I love that.
so yeah, but irreversibility is the big problem for a consumer use case, because consumers demand reversibility.
Mhm.
They really like reversibility. I have, like most people in Europe, I have a card in my wallet that contains pounds, and that card is hooked to an account at my bank. And I just wave my card and I can make small purchases. But that's actually got complete reversibility.
Mhm.
If I don't like any transaction and I see one at the end of the day, I contact my bank and say, hey, I didn't make that one. They will reverse it and they'll eat it, because consumers demanded high reversibility from that thing. Otherwise, they weren't going to go for it.
Yeah.
And there's reversibility built into the banking system up to quite high levels. You know,
Mhm.
um, fraud is traceable and generally reversible. And this is why clearances take a day or 2 days or whatever, because there's good reasons for it. You know, like none of the problems with remittances and delays in international transmission are technology. None of the problems are. We know how to change numbers on computers. We're quite good at it. You know,
Mhm.
when you transmit money from one bank to another bank internationally, they just shuffle numbers in their computers, but
Mhm.
they do it under the purview of a regulatory regime. Because of course we're going to have regulation, because I think the key concept I use these days, of course, is other people's money. If you're dealing in other people's money, those other people are going to have very particular ideas about how you handle other people's money.
Right.
So if you're in a society that has money, you're going to have some sort of regulation. You know, you can argue about whether it's too much, whether it's oppressive, whether it makes sense, whether it isn't hobbling business, whether consumers are or aren't protected enough, and so on. Those arguments are good. It's good
Mhm.
to argue that stuff because you need to, but you are totally going to have some sort of regulation, because society has very particular ideas about other people's money. You know,
Mhm.
um, so all international delays in payment are basically regulation and making sure things are done very, very properly, because of course crooks are very creative. So, yeah, it's all your problems are regulatory and social and trying to work stuff out. There's a strong hypothesis. Financial Times has been pushing this one quite hard, that all the talk of central bank currencies is not about central bank currencies.
Okay.
It's the central banks trying to scare the commercial banks into sorting out their remittance networks inside,
Mhm.
like say the EU or whatever. Like this, it's still not as good as it could be inside the EU. You know,
Mhm.
SEPA is quite good, but there needs to be a more real-time one. You know, like faster payments type things. Like most countries have a good fast payments real-time retail settlement network inside their country, but like UK's faster payments is great. It's really good. It's just in seconds you can send money to anyone else with a bank account in the UK.
Mhm.
And most countries have something like that. The US doesn't yet. They're
No.
working on it. That'll be fed now when it comes. It's a hard problem to get right, you know, and obviously you have to get it 100% right. But that's basically what the central banks really want. Um, a lot of commenters think, and I'm inclined to agree, that's highly plausible. They want commercial banks to sort out transmitting money between themselves, please. Thank you.
But I mean, sort of. So why then is that such a big threat? Is it a matter of like, you know, if there's a central bank digital currency, then the commercial banks and all these other banks will lose possible profits that they get from systems like
Poss-
faster payments?
Possible business, possible
Yeah.
deposits, that sort of thing.
Mhm.
So yeah, that's what they think is happening, and I'm inclined to agree that that's probably part of it. It's all politics.
Okay.
I don't
Interesting.
think any working central bank currency systems are going to come out of it, or if they do, it'll be on a small level. I would be unsurprised if someone puts something into production just because they've been talking about it so much. Like there's a trial
Uh-huh.
running. There was what was touted as a central bank currency trial in Sweden. It's actually just
Yes.
a toy system which was set up by Accenture, where customers pretend to transmit krona between each other. And I'm not sure what they're supposed to learn from this. It was literally just a toy
Yeah.
proof of concept thing. There's a trial running in China right now, and details on it are very scarce. Like, are actual humans actually using this for actual money? That's not clear yet, but you know.
Right,
So
exactly. So then I kind of wonder, you know, if you know, within the blockchain and cryptocurrency sort of sphere, I think it could be argued that most people are sort of, for one reason or another, believing or pushing this narrative that CBDCs are the way of the future, and like this is definitely going to happen. It's just a matter of time. You know, where do you see blockchain and cryptocurrency realistically heading? You know, if that's not the thing that's going to happen. Does this really have a future? And what does that future look like?
So in that sense, CBDCs as good news for Bitcoin are just the latest good news for Bitcoin narrative, you know. I
Right.
mean, remember
Okay.
that everything is the good news for Bitcoin. Also, its opposite is good news for Bitcoin.
I love it. I
As
love it. That's so
as we've
true. Yeah.
followed for the last several years, it's all narrative, and there, because what the real problem is, Bitcoin had a genuine public mainstream asset bubble in 2017.
Mhm.
A lot of the early buyers, they cashed out and they were finally rich, you know.
Yeah.
Like there were basically three waves of this. You had the people who made Bitcoins on their PC in 2009, 2010. They mostly cashed out in 2013, just before Mt. Gox collapsed. You know, like
Mhm.
these things are worth money. Good, take it. You know, there were the people who, the bag holders from the 2013 peak. They finally got to cash out in 2017. So
Yeah.
now we have the bag holders from the 2017 peak. They can only cash out if there are even bigger fools.
And do you think that's
There
going
is,
to happen?
it might happen. I won't say it won't,
Okay.
but you know, because Bitcoin is literally is functionally these days, it's basically a speculative asset.
Yeah.
Like there's nothing to do with it except trade it to someone else. It doesn't have a use case. This is an important thing about crypto. There is no circular flow of income, right? There is
Mhm.
no actual crypto economy. No one
Mhm.
takes their wages in Bitcoins. There's no, or Ether. There, let's use Ether because that's one actually that's quite popular because it's got much faster block times and lower fees. So it's quite, it's definitely the second one, you know, and it's the only
Mhm.
one it's the only crypto whose price is even slightly independent of Bitcoins. So um, Bitcoin or Ether, either of them. There's no one who's really living off this stuff. I mean, there's a little bit of a payment use case for both. I won't say there's zero. I'll say it's very, very small. Overwhelmingly, they're used for speculation. There really isn't a crypto economy. There's nothing
Mhm.
to do with these things except trade them for actual money. So in
Mhm.
that sense, as Francis Coppola put it, Bitcoin is a dollar derivative. Functionally, it
Yeah.
is.
Yeah.
Um,
Absolutely.
even the biggest Bitcoin fans talk about how great Bitcoin's doing in dollars. You know,
Yeah, exactly. It's like this thing couldn't exist sort of independently, at least not in the version that it is right now, not in this world.
yeah, no one is actually buying things in cryptos,
Yeah.
and that is a big problem for it
Mhm.
as money. So I won't say it's impossible that such a thing will happen, but I see no reason for that to change. You know, there's nothing on the horizon that means that'll change. So that is a big problem because it means all you can do with this stuff is speculate. Um, and since the trading is, you can totally get rich in cryptos and you can totally lose your shirt. Um, so it's super, super risky. It's basically gambling. And if you're a trader, then you are a professional gambler. You know, making rational decisions under uncertainty in a market, in a commodity that literally has no use case. You know, it's not like gold where it can sit there, or Beanie Babies. At least you get a cute cuddly toy. You know, I mean, what do you do with a Bitcoin? You look at it.
Uh-huh.
Um, so it's this. I think is a problem because this means it might go to $1 zillion, maybe in some sense, but
Yeah.
it's already not so easy to get change Bitcoins or cryptos into actual dollars. Like banks look at you funny because there's so much fraud in the space that so many dodgy operators in the space that banks take cryptos as being a big red flag. You know,
Mhm.
I mean, much more crookedness is done with the US dollar, but US
Of course.
dollar's main use case is just being ordinary money,
Mhm.
right? It's like it is actually a problem for crypto that there are so much of the use is um, questionable to criminal. That's a problem, you know.
Yeah.
Um, it means that there'll be some sort of easy win for law enforcement. You know, let's take out the Bitcoiners. That'll take care of X number of crooks. You know, I mean,
Mhm.
this is ignoring the issue that if you're going to do crimes, then doing crimes on a permanent immutable ledger that everyone has a copy of is probably not very smart. And that people are still getting busted for stuff they did on Silk Road in 2013. It's, yeah. So it's possible that Bitcoin will zoom to the moon again. How tradable it is, I don't know. I think that the future for cryptos is increasing regulation. That is, they'll become increasingly normalized financial instruments with laws and rules around them, because this stuff involves other people's money. So that's going to happen. I thought, I would have predicted there would have been another bubble around 2021, like 4 years after the previous one, because there's a certain kind of person who is one of life's suckers. These are people, we all know people like this, right? Friend or uncle or whatever. They've always got a scheme going. There's always going to make out big this time, you know? We all know someone like this. And sometimes they make it big, and then 3 months later, all their money's gone because they've gone for the next scam. These are people who are actively out there looking for a scam to be sucked in by. So they flock to crypto. Like 20 years ago, they were buying ostrich farms. Now they're buying, then they were, in 2017, they were buying cryptos, you know. So I figured that a fresh crop of those people would have come along by about 2021. But then I think Bitcoin blew it, because there was always price movements last year where it went from 4,000 to 8,000 to 13,000, back down to 8,000 and so on. But there was no retail volume. This was something a lot of people noticed. The retail volume just wasn't really there. And basically a lot of that stuff made sense when you realized that a lot of it was sudden jumps in price because someone was trying to burn the margin traders, you know, where you have, so basically there was one in May where we worked out that someone spent $5 million dumping all their Bitcoins on Bitstamp in order to bias the price on BitMEX, which takes its price from Bitstamp and Coinbase, and doing so blew out $250 million of long bets by margin traders. If it costs less to rig the bet than you'd make winning the bet, people are going to rig the bet. Note that that holds even if BitMEX and Bitstamp are completely honest and above board. It's the structure of the market is set to have manipulation. So you see the Bart formation, the sort of Bart Simpson's haircut formation.
Right.
Now you see those in other markets too, thinly traded foreign exchange markets, thinly traded commodities. If something is thinly traded and the regulators are asleep, you'll often see that sort of formation happening, and it's all trying to burn the margin traders. So this has, as far as I can tell, that explains most of the price movement through 2019. So no one took those towering prices very seriously. So I think that will hamper a fresh asset bubble in 2021. I could be wrong, but yeah.
Yeah. So why would somebody want to burn the margin traders? I mean, do they?
So they can win a bet against them.
Yes. Okay.
So yeah. And when you've got tethers pouring into the Bitcoin market at a fabulous rate, they printed $2 billion in the last month. And
market cap,
we literally know that tethers are not backed one-to-one by US dollars. They admitted this. They admitted they're backed by other Bitcoins, or maybe by loans to themselves or something. And it's like, apparently this is fine. So it makes it hard to take crypto prices seriously sometimes.
Right.
I mean, you could cash out. Good luck. There's a few dollar exchanges left. Overwhelmingly, Bitcoin trading volume is tethers, not dollars, but you know.
Right. That's, of course. And so do you see this then sort of like, you know, as a perpetually speculative market that sort of feeds itself into eternity? Or, you know, do you think that these other narratives that come along, like, for example, you know, Libra saying we're going to bank the unbanked and all this stuff, do you think that that's just totally not realistic?
I don't think it's relevant. I don't think it'd do anything to the Bitcoin price specifically. It might get people talking about Bitcoin more, which it did,
Mhm.
which might be good news for Bitcoin.
Yeah.
Um, I don't know. It could do. So I don't know if anyone will do another. I mean, in 2019, there were two mainstream news stories about crypto. One
Mm.
was Quadriga exchange collapsing. The other was Libra.
Yeah.
And there was a very, very trailing third story, which was, oh, look, the Bitcoin price is doing weird things. How funny. With people like me in the comments saying, yeah, it's manipulation with tethers. Yep.
Mm.
And, you know, so I think the trouble is that since the bubble of 2017, we've been in the crypto winter, and there's no reason for that winter to end. And I think I've been calling it the crypto ice age now, because there's just, it, it, it might end at any time, but I don't see it happening anytime soon. And then we had the COVID-19 crash of absolutely all the markets and everything,
Oh yeah.
when the whole economy has gone sideways, and more specifically, not just the economy, but the whole of finance has gone
Hmm.
sideways. Because finance likes to think of itself as the important part of the thing, but it, it is often the tail that wags the dog, the real economy. But
Mm.
it really isn't, though. The actual economy is the thing, actual people with actual lives trying to eat and have a house and stuff like that. And suddenly governments are in crisis mode, and everyone's in crisis mode, just trying to achieve basic food and shelter. And nobody knows what markets are supposed to do. No one knows what the price of anything is anymore. It turns out that it may not matter what the price of anything is
Hmm.
anymore. Oil went negative yesterday.
Yeah.
It and that's because of a genuine drop in demand, and that'll come back. If demand comes back, it's oil. We know how to tap oil wells, but yeah, it's everything is going sideways. So for crypto, the thing is that ever since you could exchange bitcoins for dollars, like 2011 or so, it's been in a continuous bull market. A long, steady stock market rise from 2011 to 2020, and for Bitcoin's whole existence has been in the best possible circumstances. Now there's been a big crash, and of course, the very few people who were invested in Bitcoin had to get out and cash out and get cash, because they were
Hmm.
suddenly strapped for cash. They would just dump everything,
Yeah.
particularly the novelty collectibles, get rid of those, So suddenly Bitcoin went through the floor, um, all of a sudden. And that's like, in the best possible conditions, Bitcoin couldn't recover, and these are not the best possible conditions. So I don't know what Bitcoin will do for the next year, and any more than I do what any other market will do for the next year. And anyone who says they do know is talking rubbish, because nobody knows. Because it's a disaster, in case anyone didn't look outside, at the curiously clear skies and the curiously quiet roads.
Yeah.
So yeah, I don't know what Bitcoin will do if all of things get better and we get to leave our houses and go to our jobs again. Neither does anyone else. I haven't heard any sign of a new use case that would convince anyone who wasn't already a believer. I have people already telling me, just wait another 5 years. Fine. You know,
I can wait
they've
5
been saying it for the last 10 years. I'm sure we can wait another 5, and then we can wait another 5 after that. It's
years.
possible there'll be another bubble. Anything could happen. There's nothing that Bitcoin can do except go up and down. So maybe it'll go up.
Yeah. David, it's been such a pleasure to talk to you. I think this is kind of a good place to end our interview.
Okay.
Can you tell our people who are listening and watching this where they can find you if they haven't found you already?
Right. So the main place to find me is on my Twitter at David Gerard. There is my website, davidgerard.co.uk,
Mhm.
and my blog, which is davidgerard.co.uk/blockchain, which is also called Attack of the 50-Foot Blockchain. If you type in David Gerard Bitcoin into Google, you'll find me. And I'm on Twitter about 16 hours a day. And I posted a blog, try to make it at least twice a week. I've been surprisingly busy even in lockdown. So I've been posting a bit less lately, but trying to get back into it. And I was supposedly working on a book about Libra, which was totally going to be out in November. But
well, what happened? Where's the Libra book?
It turns out to be really hard work understanding all this stuff I needed to understand. Talking to a lot of central bankers and stuff, you know. But now that Libra has finally completely capitulated to regulators, that's a nice ending point. You know, it's possible that they'll turn their PayPal, but it's Facebook, into some larger, great big Facebook owns the money now thing. But I think the regulators will be keeping a close eye on them.
Yeah. I'd be willing to agree with you there, David. Thank you genuinely so much. It's been such a pleasure and joy to talk to you.
Thank you very much.